Hi, Dr. Aris as well. Thanks, Ekta, for that. Vivek, coming across to you, but NTPC, not that great?
Well, that's right. While optically the numbers, especially when you're talking about the revenues as well as EBITDA, were higher than the CNBC-TV18 poll. Now, what you're actually looking at is, given the fact that the realization was much higher on the back of higher mix of imported coal. However, the profitability was below estimates, and also given the fact that losses in the JV has actually gone ahead and impacted the consolidated profits. While looking at the numbers, the conference call highlight one of the key takeaways was the fact that the company has said that now they're looking to go ahead and monetize close to 10 to 20% stake as far as NTPC Green Energy Limited is concerned. NTPC Green Energy Limited is the holding company for all of the green energy initiatives of the company, and this is something that has kept the street quite enthused. Now, what is BofA Securities saying? They've gone ahead and kept a buy. They're saying that it's been an earnings whiz. However, revenue as well as generation were up on a year-on-year basis. They're saying that the RE, or the renewable energy scale-up, is something that could go ahead and re-rate valuations, given the fact that NTPC still trades on an attractive valuation.
Right, Vivek, thanks a lot for that. The other stock on our radar will be Indian Oil Corp. Sonal joins in now. Sonal, you've told us about the cars. Tell us about the fuel.
For IOC this time around, the reported numbers, they will definitely look like a big beat. Revenues higher than estimates at 2.07 lakh crore rupees. Company actually reported an EBITDA profit of 1,960 crore rupees versus an estimate of loss. And losses were much lower than estimates, came in at 272 crore rupees. Now, two reasons for that. The first one is they have accounted for the LPG subsidy or the LPG grant that the government recently announced, and IOC got 10,800 crore rupees out of that, and that is something which is accounted for in the EBITDA as well. Exo which the company's EBITDA loss would have been 8,840 crore rupees. That's a huge number, still lower than what the street was working with. However, the company is surprised on the refining front. The reported GRMs came in at $18.50 per barrel versus poll of $2 to $3 per barrel. Core GRMs there as well. That means the company did not see any inventory loss despite crude prices coming down. But marketing continues to remain a big headache for all these companies. According to Jefferies, marketing losses on diesel is 10 rupees per litre. Petrol, however, is doing well for them, but diesel sees more consumption for these companies as well. They've cut their FY23 EBITDA by 50% because of the marketing losses that diesel continues to see. MOSL has also cut FY23 EPS estimates by 32% because of the weakness that was seen in second quarter for the company.
Okay, all right. Sonal, thanks a lot for that. Well, I'm going to tell you about Vedanta. Normally, it's not a big move on its results, so the numbers look pretty okay. And we have a bit of a tailwind because commodity prices, particularly zinc has moved up a little bit and aluminium as well has moved up a little bit. It's not because of demand, but because supply constraints. Let's run you through the numbers. The top line was a little bit better, but they reported a little bit higher volumes in a couple of segments. And also they had a forex gain, or a gain that they've got because of hedging. Risk management out there. The EBITDA number as well looked pretty good out there. But the segmental performance is something that we're looking at. So Zinc International, that's a smaller part of their business, but it did much better, even though zinc prices were under some pressure. So that's pretty good. The aluminium business was a little bit better as well. Remember, the street was expecting a washout closer to 500, 550 crores, or came in at around 750 crores. So that's as well pretty good news. The oil and gas segment looks better, but you need to adjust it for closer to 500 crores, which is a one-time adjustment. They accounted for the windfall taxation as a one-off. So that's why that looked better, but otherwise it was in line. So going with green on Vedanta, not a big mover normally on results, but we'll keep an eye out on that stock as well. But Vivek, coming back to you, busy weekend for you. JSW Energy and Tata Power, you're tracking both those two?
Well, that's right. So a lot of energy companies reported their results over the weekend. Tata Power, when you're talking about this numbers optically very strong, especially given the fact that most of the verticals, including the solar EPC business, is something that has tracked quite well, especially in terms of the order inflow. What aided the profitability, very sharp surge in profitability, was the fact that the company, which has a natural hedge, since it has mines as far as Indonesia is concerned, that came in and aided the profitability. Revenues were well above what the CNBC poll were, up 43% on a year-on-year basis. Margins too coming in at 12.6%, and net profit jumping up almost 85% on a year-on-year basis. Now, what brokerages are saying that given the fact that Indonesia continues to remain a key driver of its PAT, however, the solar EPC business backlog, which is up almost 65%, has also seen quite a bit of large orders coming in from HJVN and NHPC. One thing to watch out for, the Mundra tariff order continues to be under section level, so there is a cost passed through, and this interim cost pass-through has been extended till December 2022. What is important to track is, when the final order does come in. Talking about JSW Energy, slightly muted quarter. Merchant sales this time around were something that were quite muted. However, what actually aided the company was the fact that Vijayanagar solar operations was something that is quite strong. EBITDA was down almost 4.3%. Profitability, however, on the back of stronger, higher income, went up almost 38%.
Thank you very much, Vivek.